Hello friends, hope you're doing good. Welcome back to my channel. Today's video is about 10 reasons why IDFC First Bank can get re-rated. Yeah. So the first reason is I don't want to cover the same information which is already available in the presentations. Please go through it. First is the diversified loan book. As you can see, I think it is almost like a colorful. That means not one segment is actually kind of uh, overly lended or something like that. So you can see here loan against property and home loan and all these things are actually uh, kind of mortgage backed loans. So these are kind of safe loans or secured loans, you can say. That is 29%. If you see here others, actually they are all kind of equally, almost equally distributed. That is one thing. And second thing also, you can see, I think retail loan book is also really good. If it is retail lending, I think the chances of running away is very less. And of course, the MFI business was little bit risky because there is no uh, income back and other things, and they had also taken loans from different parties. I think that's why there was a pain in the last quarter. I mean, last quarter and also in another 2 quarters it can continue. Otherwise, I think if you see here the retail loan book, it is always safer in longer period of time. And as I said, I think retail loan book and rural and MSME actually it has grown really good. It is almost growing like at a 20% rate. You can see, I think from when the merger happened and now it is really grown at almost like 20%. This is really good. And also, wholesale lending is also is actually not that much. I think if you can see here, the top 20 single borrowers has been reduced to 4%. This is also kind of uh, avoid the riskiness in the business. And even five industries, that is also reduced to 20% now. uh, Next one, reason two is CASA ratio. If you can see all across the industry, so they are a little bit struggling to get the CASA, but somehow I think IDFC First Bank is able to really get a good CASA, and also it is going at 25%. CASA means current account and savings account deposit. The people will keep the money there, which bank can utilize easily, use it to lending it to the higher interest rate. And even it is also stable at almost like 45%. Even the bigger banks are also don't have this much of CASA ratio, almost like 30 to 40% it is there. But IDFC First Bank is really good. This is reason number two. And if you go to reason number three, as I said, there is was MFI pain was there. uh, Good thing is, they are also reducing the overall book has been reduced now to 4% now, which is almost like 6.6% in the March 2024. This is also one of the thing I don't like. Mr. V. Vaidyanathan already taken the action to reduce the MFI loan book, but however he never disclosed it. Even he started insuring his book, as well as he was also in one of the interview you said, he said that I think our quarter three profit will come at 4 digit, I think 1,000 crores or something. He declared, I think last year quarter one or quarter two, can't call. So that was also not good. But anyway, I think whatever is there, we need to accept. Currently, I think the loan book is getting reduced. It is at 4%. Another good news is also actually that this loan book is been getting covered with the insurance companies. Almost 66% of the loan book has been now covered as on March 2025 with the this government organization, CGFMU. I think whenever there is a uh, NPA happening in this sector, MFI sector, I think the government is covered for this, and the bank can claim the money from them. So reason number four is reduction in cost to income ratio. So as you can see here in the asset side, already it has come down to 50%, and retail also it has actually little bit getting down, but it is not that much reduced still. And even credit cards also has become 75% now. This is one of the good news. But as you can also see here, it is total 73%, and it is you know uh, it will be going down to 65% by financial year 27. I think this is the commitment given by, I think, in the presentation itself by IDFC First Bank. If it is reduced to 65%, I think this will also increase the profitability. However, there was also 2.0 guidance. Now it has been removed from the investor presentation itself. I don't know. Somehow, whatever the management is saying, you cannot take it fully as a truth. You have to take it with a pinch of salt. So many times they are giving, over committing, and they are not delivering as per their commitments. So that is also visible in the share price. If I go to share price of the bank, so if you see from last 5 years when the merger happened, so the price was almost like 50 to 60 range. Sorry, here on the 2018, I think 48 to 54, this round value it is there. If you now see also, it is 68 as well. That means it is actually not given much returns to the investors. However, market is always forward looking. Even when it was corrected to 52 levels, it has bounced back, and now it is trading at more than 50-day moving average and as well as 200-day moving average. And as management also committed that the MFI uh, provisions will be keep on reducing. I think it was peaked out in last quarter, and it will keep on reducing from this quarter and next quarter. I think quarter 3 onwards, this should post good profit. I think that's what management is committed. Market is forward looking. That's why I think it is also already re-rated. I think it has almost up by 30% from the low level of January. I think even the market has come back, as well as this bank also come back almost 30%. It is given back. So in terms of expenditure, anyway, I think they have to improve the profitability. Means last 5 years, this share has not done anything to the shareholders. They are also not very happy now, and also they're losing patience with Mr. V. Vaidyanathan. So because of that, there are a lot of measures going on now. I think one of the measure is also operating expenditure reduction. As you can see here, what was there uh, in quarter 4 financial year 24, it was almost like 30% of the expenses were there. Now it has become 12%. I think you can already, it's clearly visible that they are focusing on reduction of cost, and also getting rid of the other high borrowing cost and other things. There are a lot of taking a lot of measures to increase the profitability. They also committed that I think now onwards it's going to you know uh, it's going to be profitable. Yeah, let's see. Let's take a pinch of salt, but keep watching. If you're already holding it, don't sell it. Wait for another 1 year at least, just to see whether it is turning out. So reason number 5 is fundraise. So there are actually two investors, Warburg Pincus and Adia. They are investing almost like 7,500. I think these company also exited at almost like 85 rupees share price or something. Again, they are coming back and they invested at 60 rupees share price. This is also one of the questionable about the Mr. V. Vaidyanathan calls what he is taking about. Somehow they were able to exit at a higher price, and now they are getting a entry back into at 60 rupees. This is not acceptable by uh, for the most of the people. Another thing is also they wanted non-retiring board membership. I think the DIA or the big investors have actually rejected that. Now we should see whether the 7,500 crores will be uh, can be risen easily, or whether there will be any hiccups that we need to see. However, I think if 7,500 crores is risen, then it will be actually sufficient for another 2 to 2.5 years. For the purpose of fund has been already given here to support the bank's next phase of growth, including the expansion of credit card and wealth management business. This is what they've given. But if they're able to raise it, then it is good news. However, for the investor, since it has not done anything from last 5 years, and also they are diluting equity like uh, very badly. Almost when the merger happened, the total number of shares were almost like around, as you can see here, almost like 424 crores or something. Here you can see, I think merger happened somewhere here. 478 crores were there. Now it has been already diluted to 732. If 732 crores, too much of equity is there. First, second thing is also if they issue another 150 crore shares here, it will almost go to 850 crores of shares. I think that is too much, dilution. It's almost like 15% dilution. However, if 7,500 comes freely with that 15% equity dilution, it is also kind of, it will add little bit, uh, addition to the book value. It will become 53 or something. That is one thing. Second bad thing is also, the earlier equity rise happened at 93 rupees as well as 80 rupees. Now this is happening at 60 rupees. That's also another bad thing. If you say same thing, 7,500 would have risen at 80 or something, the book value would have increased more. But however, anyway, we have to accept what is happening. And yeah, here also you can see it's going to increase by 53 rupees. That is what is happening. And reason number 6 is reduction of high cost borrowings. As I said, I think I also covered last videos. I think the current borrowings, legacy borrowings, are at actually 8.89. So now they're reducing. If you see financial year 26, I think this current year they're going to reduce by another 4,495. Behind financial year 26, it will become 306. That is kind of negligible. But I think this year is important where they're going to reduce the high cost borrowings. This can also help them for the cost of borrowings will be lesser for that. And reason number 7 is, I think good thing is, I think the credit card business has become break even. So they have posted little bit small profit here. And as you can see, they have started from nothing, the credit card business, and now they are already at 6,000 crores. And also they got some 3.5 million cards they issued. So I think even the interest and other things is more in this case of credit card. It is very good business. I think they charge some up to 30% some of the cards. And reason number 8, I think RBI has already reduced 2 times. Point 5 has been reduced. Currently the repo rate is a 6.25 or something from 6.75. And this is current today's news. So they are also saying that it will be reducing further by another 3 cuts will be there. 3 RBI cuts will be there this financial year. This will definitely reduce. I mean, helpful for IDFC First Bank, because almost like uh, IDFC First Bank loan book is 60% fixed rate. This is also one of the screenshot from the Jeffries last report. So 60% is fixed rate. That's why if the interest rate is reducing, the bank will have good margin. That is reason number 8. And come to reason number 9. I think strong profitability. So currently, as you can see, profit before tax is almost like 7,000 uh, crores here. So because of the provision, this has been reduced actually. And even the fee income, net interest income, everything has been going good, except the profitability because of the more provisions. If you can quickly see this one, pre-provisioning operating profit is 7,000 in the last financial year. Out of that, 5,500 was the provisions. You can see here. Because of that, the profit has reduced fully. So you can calculate yourself. If the provisions is going to reduce this financial year, and also the operating profit will grow almost like 1,000 crores if we put it also for this financial year. I think 8,000 should be the operating profit. In the provision, if you reduce it to 3,000 or 4,000, because of the toll issue and this MFI provisions, this has been increased. If you can reduce this, if you bring it to 3,500 or something, or 4,000 also, if the operating profit, pre-provision operating profit is 8,000, out of that if you minus 4,000, I think this is just a rough estimation from my side. Don't take this as uh, guidance or something. So 4,000 also, if you see, 4,000 means 8,500 shares also, 850 crore shares also. Out of that, if you calculate 4,000 means the EPS will come to 4 to 5. If you multiply it by 20 also, I think the share price should become 100 for this financial year. Anyway, and reason number 10 is mutual fund houses started accumulating. You can see here, November 2024, this much was the number of shares what they had accumulated, and each month they keep on increasing it. Even in the March quarter, the shareholding pattern is there with us here, as you can see here. Here DIAs have increased to almost like 3%. And yeah, they have also again increased, I think last month as well. As you can see here, they increased it. I think since they are finding the value, I think because of that this is keep on increasing. Even if you see Mr. Ashish Dhawan, he is holding actually IDFC First Bank almost like from 8 years or something through the parent company IDFC Limited. When the price fell down, I think in the month of January, February, again he has increased it. Even though it could be small amount, but he has got the conviction to increase it. So my conclusion is, I think uh, considering the management's commentary and all, and also considering the book value now it is 53. I think this should get a re-rating at least to two times book value. Yeah? That is where the our other big banks are trading. You can see here price to book value. It is HDFC Bank is 3, ICC Bank is also 3, 2.62, and even Axis Bank is 1.98. So considering all this, even if you give a price to book value of 2, I think it should trade at 53 into 2, 106. This is currently undervalued. But I think depending on the profitability, I think this should also book value should also go up, as well as the share price should go up. I think I'm expecting the turnaround should happen this year. And this video is only for education purpose. Please consider this buying and selling on your own analysis or with a financial advisor help. Only the bad thing is the number of shares is too much already, but otherwise I think this is coming back to the track. If the MFI pain is gone, I think that is also industry wide problem. But since inflation is also getting reduced, and overall I think the loan book can also grow easily, because if they raise 7,500 crores, they will have sufficient money to lend as well. Even their CASA ratio is also good. I think growing at 20% is not so difficult for IDFC First Bank. If they take care of the profitability part, I think this can become a very good bet. Thanks for now. Bye.